Everyone has seen it. That perfect image, carefully made to grab our attention. Filtered Instagram posts, slick YouTube videos, flashy ads that promise us the world. We see a nomad trader, laptop on their lap, sipping a cocktail on a white sand beach. With just a few clicks, they seem to make thousands, turning the market into their personal ATM. The dream of financial freedom through trading is incredibly powerful because it doesn't just sell money, it sells an escape. A life with no boss telling you what to do, income that only depends on your skill, and the ability to build your wealth from anywhere in the world. It's the ultimate promise, taking back control of your life and your time. But behind this digital illusion hides a much harsher reality. A truth that most trading gurus carefully avoid mentioning. The numbers are brutal. For every person who gets a taste of this dream, 9 others see their hopes crushed. About 90% of individual traders lose money and eventually give up, often after emptying their accounts. This isn't just a number. These are stories of frustration, doubt, and broken dreams by a market that doesn't give out freebies. Why such a high failure rate? Because the market isn't a game, it's an arena, a complex and impersonal machine, fed by a constant flow of data and dominated by fierce competition. You're up against big companies with armies of analysts, super-fast algorithms, and other traders just as determined as you are. The biggest enemy, though, is often inside ourselves, our own emotions, which push us to make silly decisions. So, what really makes the 10% who succeed different? Did they find a magic indicator or a secret algorithm? Absolutely not. Their success isn't about what they do, but rather what they avoid. They've learned not to make a handful of huge mistakes that wipe out 90% of accounts. Instead of looking for shortcuts, they built their success on strong foundations, a tough mindset, and strict risk management. These are the 2 main things that turn a gambler into a pro. In this video, we're not going to sell you a dream. We're going to give you a roadmap. We're going to break down these deadly mistakes and show you, step by step, how to avoid them to finally build a lasting trading career. Let's start with the most basic mistake: trading without a plan. Building a house without a plan. Lots of wood, nails, excitement, and no stability. Opening an account, depositing money, buying what goes up, selling what goes down, with no rhyme or reason. A trading plan is a set of written rules: entry conditions, entry price, stop loss, profit taking, risk per trade. The plan takes out the emotion. If the setup meets the rules, you act. If not, you don't. Stop hit, you get out. The top 10% treat trading like a business. Your trading plan is your business plan. Stop gambling, start planning. That's the first step to joining the 10%. Let's talk about the second account killer: overtrading. It's a slow, sneaky bleed that drains your money, often without you even realizing how much damage it's doing until it's too late. It's that constant itch, that need to always be in a trade. Buying, selling, it doesn't matter which way, as long as there's action. You're not really trading anymore, you're gambling. The market becomes a casino where excitement has replaced a real plan. What drives this? Greed, boredom, and especially FOMO, the fear of missing out. You see a stock shoot up, your heart races, and you jump in without a ticket, without a plan, and often just before it crashes. That's the perfect recipe for failure. A pro trader, though, is like a sniper. They spend 99% of their time watching, patiently waiting for all the conditions of their plan to line up perfectly. Only then do they pull the trigger. That's why they only take a few high-quality trades a week, or even a month. Quality over quantity, always. Every trade costs money. Fees, spread, slippage. Overtrading is like dying by 1,000 cuts. These costs add up and create a mathematical disadvantage. Even worse, you get decision fatigue. Your brain isn't built to make dozens of high-risk decisions. The quality of your choices will definitely get worse. And that's when the spiral starts. One bad trade, a loss. Frustration builds, then anger. To get your money back, you do a revenge trade, bigger, riskier, without any thought. It's a purely emotional decision that leads to your account being wiped out. The solution? Learn to be bored. Profitable trading is careful, almost boring. Create a strict checklist for your setups. If every box isn't checked, no trade. The market isn't offering anything? Turn off your screens. Go read, exercise, look at your past trades. Protect your money and your mental energy for the home run that will really make a difference. Reason number 3, bad risk management. Trading without this safety net is like building your fortune on the edge of a crumbling cliff. Every unprotected trade is a crack in the rock. You might feel unbeatable at the top, but erosion is silent. One day the ground gives way and everything collapses. This is the sudden end most traders face. To avoid this fate, the most important rule is to never risk more than 1% of your capital on a single trade. Sometimes 2% for the more experienced, but that's an absolute limit. This rule doesn't just protect your money, it protects your mental capital. It gives you the right to make mistakes, the right to learn without every loss being an emotional disaster. In simple terms, with a $10,000 account, your maximum loss per trade is $100. This number is non-negotiable. Your job is to adjust your position size to respect this limit. The formula is simple. The distance, entry stop, multiplied by the position size must equal $100. You never move your stop to take a bigger position. You adjust the size. Think about it. At 1% risk, it would take 100 losses in a row to ruin the account. 100. That's a statistically unlikely streak. On the flip side, the trader who risks 10-20% feels like a genius after a few wins. But the excitement is short-lived. 4 or 5 losses are enough to wipe out their capital, leaving them mentally broken. It's a losing game. The second key is the risk-to-reward ratio. Only take setups with a ratio of at least 1 to 2, ideally 1 to 3. This means that for every dollar you risk, you're aiming for a gain of $2 or $3. This is what allows your winners to more than cover your losers and build your profit. Combine the 1% rule with a 1.3 ratio, and magic happens. You can be profitable with only 40% winning trades and maintain a positive equity curve. This is the fundamental difference between gambling and operating professionally. Risk management is about surviving long enough to thrive. Without discipline, even the best plan is useless. That little voice tells you, break the rule, just this once, moving your stop loss, taking profits too early, chasing the price. Discipline is doing the right thing again and again, even when it's hard, boring, or scary. Break a rule, and your results become random. Does the plan work? Impossible to know. Keep a journal, reason for entry, stop, target, emotions. Review it every day. Be brutally honest. Build the muscle of discipline. Fear and greed are your enemies. Discipline is your weapon. Treat each trade as 1 out of 1,000. Clean execution, no attachment. We want everything right away. Instant coffee, instant messages, instant wealth. This is poison in the markets. Patience level 1, waiting for high probability setups. Sometimes hours or days doing nothing. Patience level 2, accepting losing days, weeks, or even months. Trading is all about probabilities. Impatient people constantly change their strategy. Stick with it long enough to go through a full cycle. Think of it like a small business and compounding. 5% a month is about 80% a year. Slow at first, then it grows really fast. Slow down, trust the process, and let time do most of the work. So, we've seen no plan, overtrading, bad risk management, no discipline, no patience. If I had to sum it all up in one piece of advice, start with a demo account. Don't trade a single real dollar until you've been profitable for 3 months in a row on a demo. On a demo, you test your plan, how you trade, your discipline, and your emotions, all without risk. It's like a flight simulator. Most people skip this step because of impatience and ego. Big mistake. Get your certificate for 3 months, then move to small real money trading with a proven edge and the mental strength to succeed. The secret isn't some magic indicator, it's a change in mindset, from a gambler to a business owner. The gambler looks for thrills, luck, and gut feelings. They take big risks and blame the market when they lose. The business owner has a proven edge, a business plan, protects their money, tracks their numbers, and manages their costs. They focus on the process, keep a journal, learn from losses, and avoid getting too excited about wins. You're not a genius when you win, and you're not worthless when you lose. You're just following a plan. The top 10% are risk managers first, and then traders. We've gone through the 5 reasons for failure and the main tip. Prove your strategy and discipline on a demo account for 3 months. This path isn't easy or quick. It demands dedication, learning, and a big change. From a gambler to a disciplined business owner. Surround yourself with good information and a community that believes in these ideas. Subscribe to the channel and turn on notifications. We'll cut through the noise and share real strategies you can use. Click now, and let's start this journey to steady profits. The road to 10% begins today. Let's get to work.